Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly. Yeah, there we go. All right. Welcome. Welcome. Hopefully everyone was able to rest up and get ready for the day ahead and all that fun stuff. I obviously had a metric ton of issues yesterday on NinjaTrader, which led to another reinstall once again. So we'll be dealing with a clean slate again. Let me know if anything looks off. I think I got everything set correctly again, but just as a heads up, what a mess. Hopefully that'll fix the issues though. So anyway. Good morning. I hope you all had a chance to rest up, get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to go through and understand everything that is inside there. How's it going, laddie? Good morning, good morning. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Welcome to the SSFTG fam. I'm super excited to have you all on board. If you aren't part of SSFTG yet in one way, shape, or another, there are a ton of different ways to join up. The easiest way is to join as a YouTube member with the join button right below the stream there on YouTube. It gets you in the chat room in Discord, the YouTube community board, stock and crypto chart posts, and a little bit more behind the scenes in what's going on. Of course, if you want to understand how we do everything, and then you can check out the Day Trading Academy along with full VIP and everything else that we have to offer over at ssftg.com. So whether you're here for the first time or the 1000th, good morning and welcome. I hope you are all ready to rock and roll alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what is all happening for today. Don't forget to grab your morning DP levels. Those are posted for you every single morning on the Major 7. Nasdaq, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. I feel like I had to give crypto a little bit more space this time, you know. it's kind of in a realm of its own. Anyway, we still got them sprinting shoes on, so we're good. As far as the news is concerned, there's quite a bit spread out through the day. We've got a big chunk of 8:30 news with the GDP. Thank you, annotation. Let me get that off there. So the first block of news happened at 8:30 with the GDP and initial jobless claims, 2.7% and 290,000 was the forecast respectively. And then as we go into the U.S. session, 10 o'clock pending home sales is next for September. The forecast is 0.5%. That's it. So we'll see what they're able to get going there. But I mean, well, all things considered, it's kind of where we're at right now. Not a whole lot going on, but 10 o'clock is the next slot. Let's take a look at some charts, see what's all going on today. First off, the Nasdaq. Well, it doesn't stop going higher. I guess it is what it is, right? The overall mentality that we have happening is, man, every time it hits the high, this thing rejects off really aggressively. We had this sharp, aggressive move to the downside off of that 15,700. They retested it again, really sharp rejection back down. We're coming back up again, and it seems like they're kind of tripping over themselves here. Maybe a little bit of nervousness. But there's no new lows. It's all higher lows all the way up. So the one thing that does stand out pretty interestingly, pretty obviously, would be that the market loves getting these inside traps. It's the same thing that happened over here. They got that inside trap. It never really broke down underneath the low. Same thing would be down here, getting the inside trap, but never really breaking down the low. So a lot of bulls will have a reason to believe the upside momentum, but the problem is it doesn't really give them a whole lot. That's kind of in the middle, right? That's right back on the POC. There's a lot of other things going on here that could cause some issues. So if we're looking at this overall transitory phase that they've got going on here with this kind of back and forth, new high, new low, new high, down to a new low, reversing all the way back up, all they really managed to do is create a sort of middle to bottom third weighted POC at 572. And so far, it seems like the bulls are getting it. But notice they haven't actually physically tested it. And that could be what the market is waiting for. Right? It's that last little dip to actually get the job done down into the 572s. So that spot right there at 572, that is a monster of a zone that I want to keep my eyes on for the concept of just a really big flush down to finish the job. Right? To actually grab the 572s, finish it off, job complete. Now, obviously, I want to give this a little bit of a different color, so let's make this spring green? Yeah, sure. We'll make it all charts as well. That's fine. Hey, Maurice, how's it going? Yeah, I don't know. I reinstalled NinjaTrader. I'm hoping that fixes the problem. Fingers crossed, right? Jeez. Oh. Is it Friday yet? This whole week, man. I tell you. Jeez. Anyway, so really that's kind of what this looks like, is at the 572s. That's going to be the zone of interest. But if we measure that up, 572s, we put the stop underneath the lows just to characterize what kind of traders these are. They're not 3-to-1s. That doesn't fit. They're not, oh man, they're just 2-to-1s. So we know that they just fit swing style. Swing traders will be entering in there. Now that's top of the bracket, right? A lot of traders would like to get in a little bit lower than that. Give them a 3-to-1 or something a little bit nicer looking if we can get that. I would really like to get that target just inside the highs there. Right about there would be perfect. So if they can get an entry point, that would be the zone, if you will, down into here for the 3-to-1s. And if they really want to continue down for like 5-to-1s, get something really meaty, then let's see. That would pop it a little bit further down. About there. 530s. So that's kind of the barrier zone of interest that a lot of the traders are going to be looking for as far as swing areas of interest to the upside. The problem is that doesn't hold. Uh-oh. What else is there, you know? From a structural perspective, what do we really have? We've got wave 1, wave 2, wave 3, wave 4, wave 5. Now, does that mean that wave 5 can't keep going? Of course not. But, well, the bottom of wave 4 is not too far away. And, well, it's kind of an awkward location. Not to mention that it hasn't stopped going higher. So, you know, again, this is one of those situations where bulls are going to be looking to buy, but they don't really want to buy way up at the top. They want to buy a pullback. Buy something where their risk-reward lines up. Over on the S&P, exact same scenario, but holding off of settlement with incredible strength. The amount of strength that's coming off of settlement is absurd. Holy crap. The overall movement that we have from the top to the bottom, initially, come on now, places a POC back at 45.65. So the market really can't hope to turn bullish until they break back above that. But if we drop this back to the previous rally up and into the pullback, we can see that they've kind of created this scenario. Whoops, let's go a little further, where it almost looks like the sellers tried getting in and they got stuck. And come on, order flow, geez. We've got this original POC, which would have been here, right? So if we look at where that was, that kind of makes sense for the sellers to try to be selling it, and they failed. They got out of break even. Starts rolling back up, so categorize where this volume is, right? The next largest volume was here, so that would have been the next POC. And if you ask me, right above the highs, what better place to put a stop for a lot of traders who are getting stopped out, but also what better spot for a lot of traders to double down, right? Try re-adding into their position. Based on the volume size, it doesn't look like they doubled down. More likely a little bit closer to 1-to-1. So they probably have a 1-to-1 POC shift. So if we're looking at their averages, right? POC here, we've got another POC which would have landed here. Their average at the time would have been somewhere right around in the middle. Again, I don't believe in coincidences, but beyond that, we can continue because there is another POC that was plotted right there, and that was a significant size, right? I mean, we're talking a lot larger than the last one here and the last one here. We're talking like doubling that volume, or pretty close to, you know? I mean, considering there's a lot of sideways and a lot of other traders inside there. So the volume effectively doubling down on itself would likely tell us that, well, wait a minute. We've got a POC here. We've got a POC here, and they doubled down on their POC here. So their average, based on that, right, based on that information, isn't just going to be break even here. No, no, no. That's not how that would work. If we do the math, we can kind of see where they would land. That would be the first entry point, second entry point, final entry point. Not exact math, but just give or takes. 45.3650 plus 45.5775. Now remember, they doubled down. So 45.65, 45.65, divided by 4 contracts total, 45.56. They're short, rounding down, we'll just say 56 even. So 45.56 even is the break-even point. which would be right there. So what I want to do based on this break-even point is see, is the market responding to this? Right? What's happening here? When the market came back down, did it respond? Yes. Okay, well, it did break through it though, so how did they follow through? Well, it looks like they were selling with it, selling with it, selling with it. It looks like they're defending it. But when it broke above it, now we're starting to see this turn into maybe some support. So we can see that we're building a case that the sellers are demonstrating that they're losing some confidence. Not necessarily losing their position, but losing a little bit of confidence. The bulls, like pretty obviously, are gobbling the sellers up, so it makes sense. But that would be their break even to the downside. So let's figure out, all right, well, if that's their break even point, and they doubled down into that move, where would their scalpers' targets be? If we were just calculating it off the narrowest high, does it give us any reasonable expectation that the market showed support there? You tell me. So, it seems to me like the shorts that got stuck doubled down hard and scalped out. Period. It's just kind of the way that it looks. Now, if they are going to expand their targets beyond the much wider ones, those haven't been hit yet. So if they do go lower and we see supportiveness coming into, what is that, 45, I'll say like 38, 39, that's going to be a big zone of interest, demonstrating that the scalpers are still exiting. They're just a different scale of scalpers. Please show the double down again. Yeah. So the double down is effectively looking at the volume nodes. So here would be the first volume node right here. So if you draw a vertical line on that, the next POC, the largest volume node is here. So that would be the next vertical line. And the next POC doesn't stop until over here. So if we were to measure the distance from the end, right? The end over here to over here, and then a little bit further. Going beyond that, is this a full double down? Not exactly. But I mean, we have to be a little bit contextually common sense, if you will. There's a lot of other traders that are doing stuff inside here, right? It's not just these traders. So doubling down from a logical perspective, it kind of fits. That's why I want to bring it through that... I want to bring it through that mentality of, okay, well, I think that's where they are, but let's prove it. Well, let's see. All right, does it actually show up? Does it demonstrate support? Well, yes. It sure does. So, well, I know that I'm onto something, right? That's my proof. So I'm not sure if I'm reading the story correctly, but when I can say, oh, well, wait a minute. Hang on a second, this story's lining up pretty well. I think I'm on the right track, you know? You got to be a little bit of a bloodhound and kind of, you know, figure out what's happening. Tell me, sir, do you practice witchcraft at all? Oh, no, it's... I mean, you know, it's something that you really have to kind of rip it apart. This is what I'm talking about when... And actually, that's perfect timing for the question, Maurice. Is this discussed in the academy? When I'm talking about ripping these charts apart, especially for the homework side of things, and bloodhounding these things, when you're looking at internally, like in Unit 3, I don't remember the exact chapter, but when it's going in the break-evens and looking at all of these things, this is what I'm talking about. Like, really just absolutely shredding this thing down to the bone, so you know what's happening. And if you don't know what's happening, then you wait for the excess proof, like we have here, as an example. I'm not exactly sure that I'm on the right trail. But when I do stuff like this and I see that I'm on the right trail, that's good enough proof. You know, that's kind of the idea. Yeah, it was a perfect timing on the question. So hopefully that answers yours too. But that's the idea is really further understanding what's happening underneath the candles. And if you don't know what's happening, then you got to wait for the proof. That was the proof. We know that the shorts exited. We know that there's a heck of a lot of bullishness coming off of the settlement on the S&P, and knowing that the shorts are exiting at their scalps, well, it seems like that might be a little bit of a challenging spot to try to go short unless they can get underneath it. We'll see. On gold, oh man, here we go. Hang on. We did have that big picture POC that sits at 45.25 Magna for them today. Yeah, exactly. And that could definitely be like a gravitational pull to kind of suck them back up to it too. Hey, Terry, how's it going? And Maurice, good morning. And everybody else so far, good morning, good morning. Over on gold, we've got this really strong continuation of the upside, but again, man, this thing is like barbed wire to a T. Literally. I mean, draw a line right through the middle, and all of these spikes are the barbs. It's not a very friendly market in that regard. But one thing is for sure, generally speaking, we have an upward directional bias. And every time it deviates outside to the downside, buyers see it as value. When it deviates to the upside, they see it as value to exit, right? That's kind of the way that this is playing. Now, the long-term picture, gold playing in the 1700s, 1800s, a lot of long-term bulls are going to be interested in this. But those are bulls on the monthly chart, right? We're zooming way out to see them. And to be fair, a lot of those traders are going to be looking for even deeper dips, potentially down in like the 13s. So they may not be full hand yet. That said, the market is still continuing to the upside. It's grinding its way higher, certainly not in any nice-looking way. If we go out to a 60-minute chart, that doesn't help much, but we can see. I mean, we're in a wedge. That's it. We're not really doing much else. It's so shallow I can't even draw the top. It was here, and then it kind of expanded out, and maybe this is the beginning of that new channel, and that is where the market started kind of creeping higher. And again, you can see the channel generally speaking. The orbit of it would be the middle in the planets, or the market just kind of orbiting around the outside of it. They generally swing back. So realistically, eventually we'll likely see that deeper swing down, but as per gravity, it'll suck it right back up again, and that's kind of what I'm looking for. So from this perspective, where would that make sense? Well, we've got a lot of traders who I guarantee you have stops underneath this low. This is a non-confirmed swing, so that is a horrible spot to put a stop. But in the short term, we can see how traders could argue that that is a short-term confirmed swing. In the long term, it's not even close, right? I mean, they'd have to get back above some serious swings way back here. So as far as a trap location, that's it. Now, what we need to do from a swing perspective is see, does that actually fit risk? Right? If I have to put my stop way underneath the low, that's $4,000, $4,300, just to make that trade fit. Now, that's a 3-to-1. Does it fit a 2-to-1? It does fit a 2-to-1, right back up to where it is now. So it's a 436 tick risk for 872 ticks to the upside. Now, is that the best spot that it could get to? Maybe, maybe not. You know, I certainly wouldn't want to necessarily have that be all in. Let's look for where the 3-to-1s start getting interesting. Right? The 3-to-1s aren't going to start picking up their interest, and I'd like to have the targets in roughly the same spot. So it's a little bit lower. That's a little too low. What about there is perfect. So that would be the base for the 3-to-1s right there. And that's kind of their hot pocket, right? That's the zone of interest that the bulls really want to see strong responsiveness. They might not necessarily get it. As we know, the market does like to slide through these areas. So if that's the case, they're probably pushing down to grab a 5-to-1, and that's I'm just eyeballing it. Whoo, man, my eyeballs are working good today. Whoo, baby. That's what I'm talking about. Friggin' nailed that. And then the 5-to-1 would be at 1698 back to the 1700s. So, I mean, that's the spot, right? The longs, we know they're not buying way the heck up here to try to get a swing. No, it doesn't fit. We need that dip. That's the hot spot right there. 1720s down to 1700s. That is one of the most vindictive spots that I can find, which means that it's probably going to be the trap spot if they need to get a trap going. Doesn't mean they have to, but when you can locate an incredibly vindictive location that's going to screw a lot of people, that's usually what the market comes back for. It's a vindictive SOB. You just got to learn to love it, I guess. On crude oil, we have that really, really sharp drive to the downside. I had issues yesterday as far as my charting and everything goes. But if we look back at the inventories, looking back at yesterday's inventories, they came out at a 4.267. Now, if you remember, the API report we were talking about came out at 2.318. There it goes. Finally loaded. 2.318, and the forecast was 1.65. So we were talking how like it's probably going to be like a 2.8, something like that. But we were still expecting a bearish number yesterday, and it came out 4.2. So this is a really good example, and I've got a video coming out soon about this. Actually, it might even be today, on analyzing these types of things with crude oil inventories from a fundamental perspective, because this is more bearish than they were even assuming based on the API rather. So with the API telling us, yeah, we should see like a 2.8 ish, you know, common sense. Comes out 4.2, like, whoa, wait a minute, what? That's the kind of response that you see. It's a lot more bearish than they expected, so it hits the gas pedal, right? When it comes out as expected, you don't get these kind of moves because everybody expected it. This is a good example of what happens when it comes out more than expected, and they have a really, really strong pulse to the downside. Likely, if we were to go across the top and look all the way from wherever the heck this thing starts, I mean, it hasn't stopped going up. Very similar to gold here. Go out to I guess we'll go out to a 60-minute? Jeez. Sheesh. Look at this thing. The move to the upside from the bottom all the way to the top. There's been no pullback. There's no lows. This thing looks like Ethereum earlier in the year. It's nuts. Oh, hang on before this thing has a freak out on me. Minute. There we go. Ooh, that's no bueno. We've got all of that POC support back at 67.85. There was obviously another major POC here, but we have not seen the POC shift. At least not until we move the volume further forward. So, again, at this point in time, going up to the high, let me use a color you can see, up to the high here, the POC is back at 67.85. So if we're looking at this from, obviously, the bulls winning that scenario, where could they likely want to go? Well, probably a 2-to-1 is the most common first stop, right? So let's look at 2-to-1. Do we have responses at 2-to-1? I think it's pretty safe to say we do. I can't even see it because it's buried on top of my DP lines. All of that bouncing right there is 2-to-1. Will purple work? There we go. Right here. That's the 2-to-1. So when we hit 2-to-1, is there a response? Check mark, yes. When we break above it, is there a response? Yes, 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 yes. Now we've broken underneath it. No, initially, of course, and then yes to the resistance side. So there's obviously something here. We're on to something. That's the 2-to-1. So if the bulls are going to continue higher, then where is their likely next stop? Well, they're probably going to target a 3-to-1. So if the market's going to continue further up for a 3-to-1, that'll place it at about 88.86. Remember 88.88 because of the easy psychological, right? 88.88. So upside objectives, you know, I mean, that's pretty far up there, all things considering. But let's drag this volume further forward and see what's going on. There's been no POC shift yet, so assumably the longs are still long. If we see the POC shift to the upside, it may be a signal, especially considering that we're bouncing at the 2-to-1s, that the traders are exiting the majority of their positions at 2-to-1s. And given that we have an undertow that's been sticking around for quite a while, this may be gearing up for a deeper pullback here, that buyers have already accepted their targets into the 2s, and maybe accepted the fact that they might not get the 3s if they fall much further. They're still clinging on. It's still hanging on to that support, but if we start getting underneath the 80s, it's doubtable that they're going to want to hang on for much more because chances are they've already liquidated 80% of their position anyway. Why not reload on the dip? Where's the dip? 67.85, maybe. We also have another big block of volume there at 69-ish, and then the obvious bounce POC. Wow. It wasn't a POC, but it bounced like one at around 74.50, 75. Couple zones of interest to the downside, but that's real far away from where it is now. Look out below. We'll see. Now, from a structural perspective, the bulls are continuing up, right? Higher low, higher low, higher low, higher low. There hasn't even been a single major low that's been broken. Until now. What do you want to bet that swings, who are looking for this to stay real high, are using an incredibly small stop down here, probably something like off the last swing, to gain an edge to maybe even, actually not even that, probably something like this, for an upswing potential of a 2-to-1 back up. Probability sucks, but it fits. I mean, even if this is only right 39% of the time, if they're going for a, well, they might have to go for a 3-to-1 to make it worthwhile, which, I mean, is always the preference anyway. But still, I mean, we can kind of see what's happening here. The bull's obviously buying that move up. And now we've got a second long bounce off of that? Jeez. We still have falling structure. Everything is still in the way. But, again, there's definitely some interest. Look in the near term from the top to the bottom. Obviously, it's probably going to be back at like 83, yeah, 83.65. So the bulls need to get it back up pretty far for them to actually take it. Big pullback time, maybe. On the euro, very nice pop to the upside. Really good continuation higher, breaking above the previous highs, and also creating somewhat of a megaphone top, question mark? Hasn't quite hit it. It's getting really close. The bottom of it missed as well, and that is something to be noted. If they missed on the low, feasibly, they could miss on the highs. Or we could look at that as a little bit of a bigger spring, right? They bounced down here, but the spring was too strong, and it shot them up. So there's a chance that we break out through the top of this, rather than looking at this specifically as a zone of resistance. So if I wanted to be a short here on the euro, what would make a lot more sense would be to try to minimize my risk as much as possible with this miss on the low, assuming that it can break above the highs. What better spot than above this swing with a stop above the next? That's about as small as you can ask for as far as a risk perspective goes. The reward perspective, however, just back to settlement is like 5 to 1, let alone back down to the megaphone, whenever it actually makes it down there, could potentially be outward of 7 or 10 to 1. I mean, it's way out there. So sellers will take it, like 100%, because the risk versus the reward, it doesn't matter if this was only right 20% of the time. If it's 10 to 1, the math still works really well. That's kind of the idea here. It's a pure math play is all it is up here. But really, that's the type of traders who are going to be playing it. So, shorts to the downside, 16,755, with initial risk being very, very small. Yeah, that's a 3 to 1. How about just back to settlement? 5 to 1? Nope. 7 to 1? 8 to 1? 9 to 1? Almost 9 to 1. 8 to 1. Fine. I guess. So, if we were to look at that from a math perspective, right? Let's say, as an example, this trade setup has an accuracy, which we already know cannot be very high. Let's say that it's right 25% of the time, okay? So 25% of the time it's right. It makes 650. 75 times it's wrong, it loses 8125. I don't know about you, but 16,250 minus 6093.75, that seems like a really nice number to me. Just saying. So that's kind of the idea with this, is that it's a pure math play. But the math is bonkers. So it's definitely a short that a lot of traders will be looking at, although the probability is very low. As far as Bitcoin is concerned, we've got more continuation to the upsides, not really doing a whole lot, though, still inside this descending kind of funky bleh. Got to really get a break up here, kind of finish the job and get it going. Same for Ethereum, really, but a nice little trap on the lows. Maybe kick it off. We shall see. Looking good here. We got the open right around the corner. Let's see, on the crypto Femex side of things, Ethereum, Link, and Tezos are once again the leaders. The euro is still waiting, so I will continue to wait as well. Where to derive the accuracy? Is it experience over time? So partially it's experience over time, but that one was like a total worst case scenario. Like, what's the worst trading math that you've ever really been able to get? Right? I mean, I haven't seen many traders get much worse unless it's really short term, but long-term traders math get much worse than like 20 to 25%. So when I'm doing a math like that off of a pure, like I said, a pure math play, it has nothing to do with how long-term probability will play into it, although it does in the sense of risk-reward. Because realistically, how is that trade ever going to be wrong more than like 20% of the time? Like, how many setups are ever going to be wrong that many times? Unless it's like a 100-tick target with a 1-tick stop. You know? I mean, using common sense, obviously. So it's a pure math play in the sense of just the risk-reward. And a lot of times in those areas, what you'll end up seeing happen is algos will play ball there. It might not necessarily span all the way down, but when algos hit, it can lead to a very rapid descent. And that's where those targets hit. So there is a little bit of experience over time, yes, but it's also just looking at it and being realistic and saying, listen, what's the worst I've ever done? You know, like, how bad have I ever been? Let's take that math, right? Is it still profitable after that math? Yes. All right. Good enough. Then it's a math play. Not to say that you can't manage it and modify your approach after it's been taken in, but 930 hits. The market's just kind of chopping around a little bit sideways. I mean, so far, we've got the really good continuation to the upside, and it looks like we've got a whoops, geez, that was way high. 1, 2, 3, or 1, 2, 3, 4, 5, depending on how you want to count it. 5 waves to the upside. This is not qualified as an impulse, so that means that we are still potentially in a corrective phase, and that may mean that we need that deeper pullback to what? Probably 572. That's the same thing, same spot. See if they can get there. So far, starting out of the gates, we've got a POC, which is bouncing all over the place. The S&P is up at 45.64. The Nasdaq's at 667.25, but it's changing a lot. A lot of shorts potentially getting juked underneath that last low, and the Nasdaq just spiking it all the way back up. The poor bulls just getting, or the poor bears just getting slammed. Now, it's right up at the highs. A lot of bulls who are buying for that trap into the open are going to be looking to take profit into these highs. Let's see if it can make its way through. The S&P continuing to power drive its way up. Ethereum backing off the highs at 4,200. Link, just kind of a double top and having a little bit of difficulty. Tezos is looking meh. Nasdaq also finding a lot of those profit takers hitting that top. Now, a lot of traders may choose to re-enter for a scalp on this next dip, like sub-70s, like this little pullback right here. Ooh, wow, that was an absolutely horrible fill. I think I got filled at a +1. Holy crap, that was a terrible fill. I got an amazing entry fill. And then when I went to sell ass to take the scalp, it backed up and took me out at like 1 tick profit. Gotta love the open volatility. What a vindictive SOB. Well, at least I know my shortcuts are working. That's good. Nice little dip back to the downside again, where a lot of bulls are going to be looking for this pulse up. Down into the wicks, sub into the 60s would be the next zone. So it's okay up here, but I'm going to maintain a little bit of a deeper pull down into the 60s as a larger zone of interest if the bulls are going to take it. Now, if they do just want to jump up for a 15, 20 tick scalp, then fine, so be it. But otherwise, I'm looking for that deeper pull. And they just took the scalp. So I wanted to load into more than one on that, but they didn't pull back far enough for me to get it. So I'll just accept the scalp and take it as is. I got a horrible fill on the first one. Jeez, I can't believe that. Oy. Nexo's looking good. Nexo's killing it. They are doing incredibly well, too. You are correct. I want to see SHIB pull back. SHIB, as a crypto and as a market contextually, lines up perfectly with a washout. It takes all of the stops underneath the lows, all the traders who bought way too high up, probably like the 8,000s. They've got their stops likely way too close, and traders know that. They'll look to gobble into those stops if they can. All right, well, the S&P 5-minute POC was at 64, although I know it did very quickly change off of that. And on the Nasdaq, it's at 74.50. Nasdaq getting towards those 60s again. The lower 60s or even like the 57s would be a nice little zone of interest. A little bit deeper. Link reversed all the way back up, looking halfway decent for the bulls to try to kick this back further. Nice little dip down here for the bulls to try to pierce it back to the upside. And there's the little trap underneath the low. Couldn't get that last fill, though. Okay. Was hoping to get that extra one a little bit lower, but I couldn't quite get it. So I am going to have to modify my approach just slightly because I didn't get that extra contract and liquidate at least one or two around the break-even point and try to trail the last one. And keep this last one going for a little bit more or possibly just a lower build. Nice little dip underneath the lows for that stop placement. I only got one down there. Man, they are making it incredibly difficult to get more than like more than what I really want. Or less than what I really want, sorry. Market's moving quickly. All right. Little pulse back up on that trap for the scalp back out. I had to exit that last one. I got a really bad fill again. I went to sell ask on that secondary pop to take 2 off, and you'll notice it slipped me like 10 ticks on that secondary exit. So I had to liquidate the third to compensate for the difference. But nice little trap underneath the low to get things going. Although effectively, after the initial slide down, it really didn't accomplish a whole lot. Still got 2.5 minutes left on the candle. What would be really nice to see just a little further down in those 30s is the next volume node. Bulls creeping the rally back to the upside again. The S&P POC isn't changing much, but 63.25, it was 64. Strong pulse back to the upside for the Nasdaq. Looking for like the 30s to 31s as the next zone of interest. Maybe even just a quick little tap underneath the 30s. It is the Nasdaq after all. Got just over 1 minute left on the current candle here. Seems like the bulls lost their fight at the top from the way that it's moving. But a lot can happen in 1 minute when it's coming to the Nasdaq at the open. That previous POC at 53 still kind of hanging out, and the bulls are trying to get it to close above. Bears are trying to get it to close underneath. A little bit of a fist fight. The 30s are a zone of interest. So far, they made it down to 35.50. Wow. They closed underneath the POC by just a handful of ticks. The first response was immediately bullishness, but the question is this just the earlier bulls trying to get out? Or is this actually the beginning of the next rally to the upside? Remember, the bigger picture is obviously incredibly bullish. It's just I want that deeper pullback to the zone of interest, and we're not even anywhere near. Like we've been talking about in the S&P, we already know the sellers have already hit the exits, but now we're seeing that excess continuation proof to the upside. The Nasdaq is unfortunately not pulling back far enough because of that rally up on the S&P. It's not helping it. Sellers on the Nasdaq will be looking to try to pressure back off of the 68s. Danger, Will Robinson. S&P closed to underneath their POC as well as the Nasdaq, although the Nasdaq's like way up there, so. All right, here's the seller's attempt. Nice pressure to the downside. They're trying to get that dip down into the lows. It made a higher low by 1 tick. 36 quarter from 35 half. For real? Looking for the longs to kick back into this move with the shorts missing their momentum to the downside. That 1 tick miss on the lows is going to have a ton of shorts really, really nervous. Ooh, nope, you're not going to terra-fill me this time. It's just not going to fill me this time, that's all. All right. The sellers were given a chance to get out. Now they're trying to pulse back above the top. Ooh, little bit of a pierce in the armor there. Ooh, a little more. A little more. Couldn't quite get it. Tried hitting the exits, but I only have the one, so still sort of waiting to see how they want to play this back to the upside. They keep challenging this spot. And I really like this for a break point. Ooh, that was a quick pulse to the upside. Yep, here we go. Can they rally it through the top this time? A lot of shorts are on the back burner right now. Trying to pulse, trying to pulse. There it is right there. Nice little pop to the upside. I'll take it. Couldn't quite get the move that I wanted through that area, obviously. I was waiting and waiting and waiting and trying to get the pulse and trying to get the pulse, and the stupid thing wouldn't do it. Fine. We've still got that previous zone, which is down in the 52s. I really wanted to see it go a little further down in the low 30s, but it's not there yet. Doge is up 27%, huh? Ooh, S&P. What was that candle right at the end? That was a fine howdy do. 945. Nice continuation further to the upside. The S&P just went from a bear bar to a top-weighted bull bar in seconds. Holy cow. A lot of time left on this. The candle literally just changed. It just turned 9:45. They might just squeeze. There might not be a pullback. It depends. I mean, the shorts are on a real sharp back burner right now, and they're being pressed against the wall. That blast off to the top side happened real fast, so a lot of shorts are underwater thinking, crap. I done made a mistake. They got to get out. And if they get squeezed out above the highs, we'll probably see a breakout, which means, unfortunately, there's not going to be much of a pullback. Otherwise, I'd like to see if we can get a slight little dip further down, especially on the S&P a little lower. I mean, the last candle closed at 68.25. Doubtable that it's going to even get there. But maybe like 69.25, 69.75, somewhere there. And even that feels like it's going to be tough to get. They're putting too much pressure on them. I'm going to see if I can get one on the bid here for a continuation up, 51.75 to 275. Tested the target. There it is. Yeah, there's too much pressure. It's a squeeze. They couldn't get the pullback. So, kind of game over, you know. I really hate buying high like that, but, you know, it is what it is. When the market's pinned at the top, there's only so much you can do. Context helps a lot in that play. Knowing that the shorts are on the back burner, knowing that they're getting a little bit of FOMO in the sense of their losses getting way bigger, way faster than they wanted it to. Nice little pulse. Quick scalp. Nasdaq shoving back off the top. Not really a huge surprise. 15,693 seems to, well, really the 690s in general seems to be a really big zone. Now, this pullback, a lot of traders who missed the last one will try to buy in at the same spot, and it'll pull back a lot further than they expect it to. Stops them out just in time to hand over the contracts to JP and the crew. Down in the 68, so halfway decent because of that. It just kind of depends on how they get there. If they get there. Got about 12 minutes until top of the hour, 10 o'clock. We do have news at 10 o'clock as well, so feel free to get those questions in. We'll get those covered for you. And then we'll roll into the extended session for members and VIPs. See if we can find anything else. Although this morning so far doesn't necessarily feel like it's over. Give me 1 second, though. I got to grab a drink. All right, we're back. Sorry about that. And here it sits, just kind of fiddling around, not really doing a whole lot of anything. Nice little flash dip there on the Nasdaq underneath the previous candle's low. Huge wick on that last bar, though. Yikes. Oh, man. VS looks like the first 5-minute POC hit their 2-to-1. Definitely could be the case, yeah. The S&P just keeps squeezing, though. It doesn't pull back. The euro is beginning to climb again. Zone of resistance is at 16,755. Ooh, Ethereum. That last bear bar, that's not happy. S&P staying back up at the top again. What? Apparently I set a reminder. I just had a reminder go off on Google telling me to put the rice in. First off, what? Second of off, I wondered why that alarm didn't go off. I set it for the wrong day. Whoops. What a sad day that was. A riceless dinner. Freaking Google. Nice little pullback here on the Nasdaq, dipping back down towards those low 50s. Low 50s. Can it dip a little further? Can I get a fill? No, I can't? Okay. Little pulse to the downside for the bulls to grab a... Wow, I only got one. The bulls to scalp out of the continuation phase to the upside. And there's the scalp out. Nice little pulse back up. POC now shifting 656. Getting a couple nice little scalps down here in the low 50s. Although I would still like to see the 30s on the Nasdaq. At least it's offering up something. The S&P is just... The S&P is playing some vindictive ball right now. Zone of interest on the S&P for scalps has to be 68. I mean, I would rather put it at 67.75, but I want to make sure that I get a fill, and I don't know that there's going to be enough stops underneath that to get a fill, so I've got to be sure. 45.68 would be the zone. Ooh, never mind. POC just shifted. Cancelled. No, thank you. I was going to use that as support, S&P. Why'd you take it from me? Okay. Well, we've got 10 o'clock right around the corner here. A couple nice extra scalps off of that 15,656 dip on the Nasdaq. The S&P, I still have a little bit of a hard time trusting it now. We haven't broken a previous candle's low. They top shifted the POC up at the high. What about if we drag this back to before the open? It's doubtable that there's going to be more volume before the open, but... Eesh. It's all the way back at 59.50. The S&P's making it tough. Oops, I don't want to delete it all. Euro's getting close. And remember, the euro is... That's a target all the way down to... back to settlement-ish, 16,240s. Incredibly small stop if you're, you know, from the perspective of hard entries, hard stops, hard targets, etc. Would be an incredibly small stop. I think the zone is going to be plagued, but in a good way, if that makes sense, by algos. So that zone is going to be a zone of interest for potentially multitudes of scalps off of that. I'll put an extra one just above it. I always forget the euro's at the half ticks now, or value-wise at least. Nasdaq coming down kind of hard. The S&P pushing back underneath the 71.75 POC. We've got a little under 4.5 minutes or so until we move into the VIP and extended session for members. So feel free to get those last questions in. We'll swap over. Man, I really want to be a buyer on the S&P, but it shifted the POC to the upside. Where's the low of this bar? 68.50. I'm going to go a little bit lower than I want to, because I think this is going to go farther down than most people are going to want it to. And I'll look to initiate the scalp with an offset with that in mind. See if they can get it going. Actually, you know what? I think it's going to go further than most people want it to do. I think the zone of interest is at 65.25. Obviously, I'm running the risk of just not getting a fill on the S&P. But if I'm going to buy anywhere for a potential larger lift, that spot more than anywhere else makes a heck of a lot more sense. Chances are it won't pull back that far, but if it does, that's the hot spot. Very strong rally to the upside here. No pullback for the S&P. Nasdaq's just kind of hovering around, not really doing a whole lot of anything. S&P's waiting for the dip back down to the 65.25. As far as the Nasdaq's concerned, man, I mean, it's offering up the dips. The dip buys seem to be the spot. Buying too far up hasn't been working very easily. Buying the dips has been a lot calmer waters. Got 10 o'clock right around the corner. Final call for questions, and we'll wrap it up. S&P's poking their head above the high again. Honestly, I'm still okay with the S&P, even if it were to go bear engulfing all the way down to 45.65. There's only 30 seconds left on the candle, so that's probably not going to happen, but... or a really, really strong bear bar might actually be a nice bullish opportunity, but hashtag just saying. We'll see what they want to do. $10 o'clock. They couldn't get that strong bear bar. Oh well. And now we are closing above the POC. Chances are the buyers are back in. I have every reason to believe them. So we'll lift it back up and see what they want to do, if they can get a little bit more of a pullback. Although, I would still rather see 70. Came one tick away. All right, we are going into 10 o'clock as well. We do have news at 10 o'clock. Obviously, that's throwing the markets around a little bit, but not really having much of an impact. I did not get a fill on that pullback there. Go figure. All right, well, let's swap over into the extended session. So that's going to do it for this side of things. If you have any questions that I may have missed, feel free to shoot those to me via email, jhb@ssftg.com. You can also post them in the comments below underneath the YouTube stream. For you extended members, VIPs, etc., just listen to me babble to myself for a second. We'll swap over. I'll get the link posted in Discord, and then we will rock and roll. All right. Hopefully you all had a fantastic trading day today. A little bit irritated with the S&P right now with that one tick miss. We'll see if it wants to play ball going into the next extended session. Get some scalps or something. Who knows? But that'll do it. Enjoy the rest of the day. Hopefully you all had a great one so far, and we will see you all tomorrow morning, all right? Have a good one. We'll talk to you all later. Thanks.